Now let's talk about paying SUTA tax. So SUTA stands for State Unemployment Tax Act. Therefore, when you pay your SUTA tax, it will be paid to the state government. It's usually due by the end of the month following each calendar quarter, but each state could have its own rules. In which case, you would just go to the state's website and look it up for the specific state that you want to know about. So recording the payment of the SUTA tax is also super simple. It's very similar to the FUTA tax. You're going to lower SUTA payable with a debit, and then the cash will go down with a credit. Next, let's talk about paying workers' compensation insurance. Remember, unlike all the other payroll taxes, workers' comp is paid at the beginning of the year, and it's based on your estimated gross payroll for the year. Let's say that the company estimated workers' comp to be $1,200. What they would do on January 1st is they would increase an asset account, probably called prepaid workers' compensation insurance, by $1,200. Now the reason that this insurance is worth $1,200 on January 1st is it's not used up. So it won't be used up until time goes by. And since we're paying for this insurance, cash will be going down with a credit. Now, this workers' comp insurance account has a value of $1,200 on January 1st. But at the end of the month, will it still be worth $1,200? No, at the end of the month, we'll have used up 1 month's worth. So at the end of the month, we need to do an adjustment to show that we've used up 1 month of workers' comp insurance. So each month you would adjust a prepaid workers' compensation insurance downward by 1 month's worth. So do you remember how much the amount was from the previous slide? It was $1,200 for 12 months. So we're first going to debit some type of an expense account, probably called workers' comp insurance expense. So now we must calculate how much the debit and credit will be. So remember, it's January 31st. 1 month has been used up, and on January 1st we paid $1,200. So how much is that for 1 month? Well, $1,200 divided by 12 months is $100. So we debit the expense by $100, meaning the expense is going up, and then we lower the prepaid workers' compensation insurance account, which is an asset, downward by $100.